Hello, everybody. Hope everybody's having a great Sunday. Everybody's had a great weekend. This is 50 Pips, 12th of January, 2014. Not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take. The fact that you're listening to this means you've read, you understand, you accept all the disclaimers on the website, and understand that basically we're just doing some technical analysis in a learning context for educational purposes only. So what's going on here? Keep in mind, we're going to have earnings season start to kick off, so that's something you want to keep in mind. And we're going into the real second, full trading week of the year. Now, first things first, what's going on the ES? Well, on the ES, we discussed this whole area, and we said that it looked like market needed to fail from higher levels, and that basically we were looking for this to continue to chop up into the 1850s. We said basically the big zone was 1850, 1800, and unless we could hold or break below that 1800, it just looked like it was sideways chop, grind in the most recent direction, which was a grind higher. Now, like 2013, there were opportunities to short, but they were very, very few. So in this kind of market, even though we know it would be healthy to see a retracement, markets can remain rational longer than you stay solvent. So what it's important is not to be stubborn and to recognize that the market is grinding higher. It's grinding higher in quite a technical fashion. So it doesn't mean you can't look for shorts, but you have to be extremely selective, right? Extremely picky and very, very focused on when and how to engage. If you're looking at it even on a 1 hour, you can see last week the action, right? We came back down into previous support, and what happened, right? The previous support caught a bid, started to accelerate, sellers coming in, trying to press this down, catches a bid hard, pressing it down again. Yeah, this super tight range, by the way, and the bids are still supporting, and bam, we break this tight range here, and we continue to grind higher. You see all these wicks to the downside, indicating that the market is having trouble to find new sellers on any dip, right? And any dip is just finding more buyers coming in. So it still feels like we need to fail from a higher level. So what I'm going to be focused on going into the week, if we press higher, is how we behave in this whole 1843, 1850. Right? If we press through, either if we fail at this level or we take out stops above the 1850 and then we can't hold a bid above that, then it's going to mean that maybe, intraday might be interesting to look for some tactical shorts or start to look to position more to the short side. But if we break through these 1850s and we hold this as support or we keep on getting bids, this is not the kind of move you want to fade. To the upside, the only thing I'm looking at to the upside is really 1874s. And again, to the downside, 1812s and 1800. But unless we really trade from a daily close perspective below the 1800, this is likely going to continue to stay bid. So keep an eye. What happens here to the upside? First interim support is going to be, are these bids still going to be here? But it looks like in this kind of market, no surprise, sideways chop to grind in the direction of the most recent move, which seems to be a move higher. Okay, what's going on? Gold, very nice on gold. So basically we've got this move right back up into the 1250 level. We've been talking about this for quite some time. 1250 pivotal for move back up into 1300s, or pressure coming in, pivotal for that move to keep on trying to keep pressure on that 1200 level. To us, we kept on saying we're still looking for this to build some kind of a base. I kept on going on about the weekly this week, and basically the whole purpose here talking about this weekly was, as we said, is look what happened. We started to catch a bid at lows, and this is basically the third week positive weekly close we've had in a row where the sellers had every single possible chance to really smack this down, and they just could not attract any new selling at lows, could not attract any more momentum. So really here it looks like it may be time for a bit of a correction. You see this come in, print new lows, the buyers are coming in. Where are they coming in? Well, they're coming in right at the support zone holding. Bam, we get a positive close. Now again, once again, all the moves lower are finding buyers. So it looks like, especially if early in the week we hold above the 1250, we could easily get some momentum to try and test those 1300s. Now this is going to be really, really important, right? Because as long as the shorts can get short and keep pressure on inside this zone, we could see more sideways chop to attempts to move back to that 1200 and break lower. But if we start to get some Momo above the 1300, then I would expect the next stop would be 1400 level. Okay, that's a weekly chart. If you go back on the daily again, you see very difficult, struggling to find new sellers at lows, and it's coming back down. Clearly the sellers tried to cap it here at 1250, exactly where we'd expect them to try and come and sell it, but buyers back 1226, talked about that on Twitter a lot. Bam. So this is where the action is again. Another week where it's still all about the same level, 1250, right? That's the big level for the week from a pivotal level from a daily close perspective, but no change in outlook. It looks like we're trying to build a bottom, trying to build a base for a move back into the 1300. Speaking of building a base, what's going on Aussie? So again, levels we've talked about a lot on Aussie. We kept on saying that if we held and we couldn't get any daily close back below those 88.50s, basically this looked like it wanted to take another stab back at the 0.90 level, coming back down on that 200 on the 4 hour. Okay, so basically you see what's happening. We're stuck in this sideways chop zone, and once we printed these lows there on that very aggressive data day, we come back down. We're chopping in the sideways throughout the holiday. We said, you know, market's going to try and take stabs outside, but unless we get momentum outside, very difficult to see where this could go, even though it looks like it's a basing pattern. And what happens here after we press this low? So we come here, higher low, we're still choppy. We try and take a stab lower, again, a higher low. We break out to the upside of this sideways consolidation zone. So what is this upside break hinting? It's hinting that ultimately we want to break up to the upside, especially if we hold mid-range of this sideways chop zone, which is, here's the mid-range. We come all the way back down, we hold the mid-range, and what happens here, once again, continuing here, low, higher low, higher low, once again at mid-range, higher low, and bam, very technical, exactly what we're looking for, right back into the 090 level. 090 level is going to be very, very pivotal. Watch what happens here into the open tonight and this week. If we hold above the 90, then I would expect possibly a move back into 91 to come very, very quickly. If we get sellers, we could easily move back down into this range. But as long as we don't take out this whole series of higher lows, it looks like that's what we want to rotate to. If you look at it on a daily, if we break above the 91 level, a lot of people asking, well, what happens above 91? Well, it looks like the path of least resistance is probably going to be this 93 zone. Now, this 93 zone is interesting because this is that first base attempt that then broke down very aggressively, so it should be previous support now acting as resistance. Also, it will be this 200, which this was the pure sell zone for the move all the way back into the previous lows. This 200 is going to start to come back into this area, and most probably this is going to be somewhere inside the 50 back of this most recent move. See, the 50 back is coming in right in that level. So this is a multi-confluence zone, so that's what I would keep an eye out. Again, we do this on a Sunday, so it needs to hopefully last for the whole week in terms of outlook, in terms of helping you guys out. So what I would say in terms of the upside, if we get momentum, look for this 200 coming back into these 93s as top, a range that will likely attract. Going into the week, I think unless we get back above the 91s, we could still see sellers. Short term, that's probably what's going to attract, and to the downside, if we hold below the 90, then it's going to be those lows. So those are the big levels to keep an eye out for going into the week on Aussie. Another thing about the commodity currencies, which was interesting, and we talked about it, was Kiwi, right? And I kept on going on about this for ages, right? Even though it's not a pure 50 back, I thought you have to respect the fact that this 50 back was coming in with this whole confluence zone of the 200 and the 100 on the daily, right? And what happened? We come in and we get this reversal candle right at the 50 back zone. Then what happens? We start to move up, right? And even though we're selling off, a lot of people getting very aggressively bearish here. So, and again, without talking about fundamentals, what you have to understand is just, just look what the chart is telling you. So you see, look at all these wicks to the downside. Even though we're getting sellers coming in, every time the sellers are coming in, the buyers are coming in to support it. And on top of it, this is given time for the 100 to cross back above the 200. all these lows to hold and this coiling action to continue. So especially on Friday, when we got this move back down into the 100, now this 100 is pressing above the 200, and bam, we close positive on the day. Does this mean this can't come back down? Absolutely not, right? If strong sellers come in, and you see these sellers are coming in right at this range, clearly this could trade heavy. But what the technicals are telling us, not only in terms of the moving averages, not only in terms of the levels that are holding, not only in terms of the price action, is that market will likely look to break higher. And if we do break higher, then 85s probably come calling. So, no change in this outlook since November last year. It still looks to me like it wants to break higher. We'll have to wait and see what happens, but the technicals are looking quite interesting. Now, another chart we talked about, okay, euro and cable. What's going on in euro and cable? So cable, we're talking about this whole zone. So this is a chart we posted last time, and again, extremely technical. Again, quite choppy, but extremely technical. We said it's all about these 6350, 6250, and that's what's going to be the pivotal levels. Now that we've broken above this zone, this is a strong support, and as long as this support holds and we don't get a day close below the 6250, we cannot change our outlook, and our outlook is for a continued grind higher back into the 166 level. So we come back down, buyers coming in, bam, support, and support holds. I mean, if you look at this even from go on to a 1 hour chart, very, very clear what's happening. You see, after we found those strong bids into the 6350s, we come back down into support, and data, non-data, all the chop, every time the market tried to come back down in here, just could not get any new sellers. There were just bids waiting there. Okay, bam, right back into those highs, and it's broken above these highs. So what you want to look at is, are these sellers still there? What's going to happen, right, as we open now, as we open overnight? If we get any selling pressure, I'd expect probably trap shorts to try and cover, and nothing's going to change, right, as long as we don't trade back. Now, at this point, it's not as much as about the 6250. If we start to trade back below the 6350, even from a day close, it's probably going to be very, very heavy. But the way I'd look at it going into the week, this is going to be the base support. Are these buyers still here? Trading right now at mid-range, and then the high range is going to be 66s. A lot of talk about whether it's time to see profit taking from the longs taking profit on this cable, the data, etc., etc. We don't talk about fundamentals here that much. We're talking about the technicals, and it looks like it's wanting to hold a bid. A lot of people focused on this move from highs to lows on that 50 back. I just like to remind you that what happens here, we go high to lows, we come right back in, the 50 back gets sold. Every subsequent test into the 50 back in this kind of action means that the setup is lower odds trade. You want these 50 backs to hold, and you want to see aggressive selling coming in. The fact that it holds a bid and that it's constructing a whole series of higher lows, breaking through, and especially on the dip now, we're back above the 61. This is really not a 61 50 back I would have on my chart at all. Okay, so it looks like it's holding still a bid tone. Let's see how it plays into the week, but those are the levels I'd be focused on. Okay. Euro, what's going on euro? So euro, again, we talked about this 6350 into 3650 into 3600. We said daily close below the 3600, then that 100 would probably come calling. We'd see more pressure on, and that's really the key in terms of action. And what happened is basically we did get some sellers coming through. We got some weight here, and what happened, we got some traction, but the 100 got defended quite aggressively. Now you see what happened. We talked a lot about those 3600, and here every time we pressed below, we had trouble holding below it, even though we had 2 daily closes below. Every time we had those negative closes, we never really closed at lows, and the buyers kept on coming in. So it was choppy, but I think anybody watching this throughout the week, it was pretty clear that it was struggling finding sellers at lows and that buyers were coming in, similar to cable. And the fact that we closed all the way back above the 36.50 to me indicates that it wants to take another stab at those higher, and if it's going to fail, it needs to fail from a higher level. You know, if you look at it from on a 4-hour chart or on a 1-hour chart, you can see how very similarly to cable is. Every time we tried to press in these lows, see what happened, all the bids coming in. And even on that aggressive, on the aggressive news move, well ahead of those lows, right? So pretty clear that it was uncomfortable and not finding sellers at lows, rather finding buyers. So just stubborn sellers at lows just cleared all those weak longs and then reversed back up. So going into the week, what I would look at here on the daily is, again, no change, 36.50 into 36.00. As long as we don't get daily closes below 36.00 and momentum below that, it looks to me like we're going to continue to trade higher. And if we're going to fail, it means that we have to fail from a higher level. Right now, what I'm looking at for this move here, I'd expect us to try and take a stab back into this hole. And I've talked about this a lot on Twitter about this 37.50 into 37.70s. That's where I'm looking price to slowly move up to, and that's probably going to be the key bull bear line for the week. Okay, so hope everyone enjoyed this. If you like the content, don't be shy about sharing it, retweeting it, liking it, whatever. So I hope to see you guys on Twitter. Have an awesome one. Have a great rest of the weekend, whoever's still in a decent time zone to have some Sunday left. And have a great week to the guys who already started the new week. Have a great one. Take care. Thanks for listening. Bye-bye.